please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello, good morning. You're watching Power Breakfast on CNBC TV 18 in the Mumbai News Center. I'm Mangla Malu and with me is Anisha Jain. Good morning, Anisha. Bears in firm control of our markets. Extended losses yesterday post the RBI policy meet, and now we're about 7-week lows for the Nifty?
Well, yes, definitely. Yesterday was not a very good day, given that the Nifty Bank also closed below the 50 DMA. Today is the day of the expiry for the weekly options as far as Bank is concerned, Bank Nifty is concerned. So it'll be an interesting day of trade. Asia is showing a bit of mixed cues, given the Nikkei has recovered some of the losses that we had seen yesterday.
Right, first up, let's take a look at the Asian markets. The Asian markets are mixed in trade. The Japanese markets are outperforming, and that's primarily because of the strength that we're seeing in the dollar. Conversely, the weakness in the yen, which is good news for the Japanese exporters. So that index up about 1.15%, but that's, remember, after some losses were made yesterday, some rebounds seen there. None seen in the Korean markets, which were underperforming yesterday as well, given the weight down by Samsung Heavy Electricals, and that one's down about 0.7% as we speak as well, trading closer to the lowest point of the session. The Straits Index is up about 0.3%, no move seen on the Taiwanese index, but the SGX Nifty, after extending some cuts yesterday, indicates a flattish start as far as our markets are concerned. 8 points in the green is what we're seeing. This is something we'll be watching out for throughout the course of the show.
Okay, so mixed cues from Asia this morning, and on Wall Street yesterday, the Nasdaq Composite rose around 0.2% at close, while the Dow and Nasdaq ended with marginal losses. The main focus of investors is new details on Congress negotiations to overhaul the US tax code. CNBC's Contessa Brewer gets us a wrap of all the action on Wall Street.
For CNBC TV 18, I'm Contessa Brewer. U.S. stocks mixed on the day. The Dow down 39, the S&P flat, and the Nasdaq up 14. U.S. companies created 190,000 new jobs in November. That was ahead of expectations, but fewer than the more than 200,000 jobs created in October, according to the payroll firm ADP's National Employment Report. Manufacturing had its best month of the year, creating 40,000 new jobs, while service-oriented industries grew by 155,000. Health insurance giant United Healthcare inks a deal to buy DaVita's clinic business for $4.9 billion in cash. The DaVita Medical Group unit operates nearly 300 clinics and 6 outpatient surgical centers. DaVita will focus on its kidney care business and use proceeds from the sale to, among other things, buy back its own stock. A Da Vinci masterpiece is heading to the Middle East, with the Louvre Abu Dhabi tweeting today it will receive Da Vinci's Salvator Mundi. The painting sold at an auction in New York last month, fetching $450 million and breaking the all-time art auction record. And that's the action from the U.S. market. I'll send it back to you.
All right, that was the action from the Wall Street, but former Fed Chair Alan Greenspan, he says the tax overhaul will do very little for growth. In a CNBC TV 18, rather CNBC exclusive, he adds Congress should focus on the deficit as inflation does remain the biggest danger.
This is a terrible fiscal situation we got ourselves into. The administration is doing a tax cut and a spending decrease, but he's doing them in the wrong order. What we need right now is a focus wholly on reducing the debt, even the debt increase. Right now, we're in a stage, if nothing is changed, we're about to go from stagnation to stagflation, with a significant rise in inflation and a wholly significant imbalance in the economy, which is very difficult to anticipate at this stage, but the outlook is not exactly terrific. I am a maverick right at the moment. I would like us to see us to move not towards a tax cut, but create a surplus. Because if we can cut entitlements and allow the funds that are saved to go back into the market, the data show that that will create a significant increase in capital investment and economic activity, quite similar to what occurred in the year 2000, 2001, for example. are seeing some buoyancy in the economy in some areas. But remember, the fourth quarter GDP is going to be significantly slower than the second and the third quarter. On the data we already have combined on a weekly basis and a lot of other information, the slowdown to a close to 2% annual rate of growth seems pretty much assured at this stage. That basically makes it very difficult to find a solution to the fiscal problem.
Right then, across the Atlantic, markets ended on a mixed note in Europe as investors reacted to a slump in global technology stocks. In fact, most major bourses were in the negative territory. The UK FTSE, that one was outperforming with a gain of 0.3%, rebounded in afternoon trade, gaining 0.3% on the upside. But if you take a look at the peripheral indices too, we saw cuts across the Italian index as well as the Greek index. The Greek index has been underperforming for a while, as well as the Spanish index, which was down about 0.3%. From the emerging market space, remember, crude oil prices were down about 3% overnight. So we saw some cuts come by in the Russian markets. And despite the weakness in global metals, we saw some moves on the upside in the Brazilian index, which was up about 1%. Remember, the previous trading session, it was down about 1.5%.
Okay, let's shift focus to the cryptocurrency Bitcoin that is rocketing to another record high above $14,000 now. The latest buying spree appears to have driven by a recent frenzy of interest among South Korean speculators and news that Bitcoin derivatives will be sold in the US by next week. Bitcoin now has a market value of more than $230 billion, meaning it would rank among the 20 largest stocks in the S&P 500. Meanwhile, experts are not very optimistic or enthused by the Bitcoin rally. Let's listen in to what they had to say.
Bitcoin is really a fascinating example of how human beings create value or estimate or judge value, and it's not always rational. You cannot tell me that you can create out of nothing something which has a medium of exchange value without bringing into the analysis the fact that sometimes people are a little bewildered, but it is not a rational currency in that sense.
More positive on it as a thing, because I think it has uses, store of value, currency, etc. I'm not optimistic on it as a way to make money, because why should the fact that it can serve as a currency or store of value mean that it should appreciate in the future? I don't see the connection there.
All right, taking that discussion forward then, Alibaba's founder Jack Ma, he believes that the world is currently not ready for cryptocurrencies.
I know very little about it, and I'm totally confused. And like, even if it works, the whole international rules and laws on trade and financing is going to completely change. I don't think we are ready for that. So I think I'm focusing on the Alipay. I'm focusing on IMB, US dollars, euros. That's
but
very
not
good
Bitcoin.
enough.
And you're not
no.
Okay, let's talk about the other physical currencies then. The dollar edged higher against a basket of major currencies on optimism about progress on US tax legislation and lawmakers' efforts to avert a US government shutdown on Saturday.
In the world of commodities, oil prices inch up on a decrease in US crude inventories, but rising gasoline stocks and crude production weighed on the markets.
From the precious metal space, gold prices edged lower, hovering close to a 2-month low hit earlier this week as dollar strengthens.
Let's move on to a big change in the United States foreign policy. President Donald Trump recognizes Jerusalem as Israel's capital, risking a huge backlash from across the Muslim world. Trump says the US will build an American embassy in Jerusalem, where it currently maintains a consulate. The current US embassy is in Tel Aviv, where most other countries' embassies are maintained. Listen in.
I've judged this course of action to be in the best interests of the United States of America and the pursuit of peace between Israel and the Palestinians. This is a long overdue step to advance the peace process and to work towards a lasting agreement.
Well, back home on Dalal Street, it was a weak day of trade. The Nifty gave up around 10,100 and the Sensex fell more than 200 points. The bank stocks clearly underperformed yesterday to fall over 1%. But how are the cues stacked up for the day? Mangalam has collated all those cues for us. Mangalam, over to you.
Well, Anisha, you know, yesterday, yes, the markets did extend their losses post the RBI policy outcome, and after doing that, the Nifty has unbound all the gains that it made since October 12th, 2017. So that's exactly where we're trading right now, the lowest level since in the last 7 weeks. The Nifty below the 20, 50 and the 100-day moving average. The technical analysts are talking about the 200-day moving average now, which actually is at 9,700. So that is something that we'll have to watch out for. The thing that really stands out is the HDFC twins as well as ICICI Bank, SBI. Yesterday, those were the key draggers. Reliance is holding up one end, but there's only so much one stock can actually do. Today, the HDFC Bank, ICICI Bank and SBI will be in focus given it's the Nifty Bank weekly options expiry. And there too, we're not seeing any respite. 24,900, 25,100. All the calls on the higher end have seen some writing. Incidentally, it's 1 month since we hit the record high of 10,490. So in the last 1 month itself, we've lost about 450 points. If you take a look at the Nifty, Sensex, which have lost around 4% each, that's no problem. But some indices like the metals as well as the pharmaceutical index, they've lost 10, 11% in their market cap. Let's take a look at a few stocks then. The likes of Lupin, Aurobindo, of course, they've lost 18 to 22%. But Vedanta, Hindalco, the stocks which have rallied earlier have also given up some of those gains. From the mid-cap space, a lot of wealth erosion in the highly leveraged plays, Reliance Group companies. Nalco too, lower LME prices, taking that stock lower by about 20%. If you take a look at the other data points that really stand out, over the last three trading sessions, the FIIs have sold about $500 million in our markets itself. And if you add their selling in the index futures itself, they would have sold close to about $0.8 to $0.9 billion in just the last few trading sessions. Their long exposure from 67% on December 1 has fallen down to 56%. Yes, there are a lot of shorts in the system. So if you have a good move in the markets, there is case for some short covering. Dow Jones, yes, it closed off the high point of the day, but Asian markets, they're doing mixed. The Nikkei has actually crossed or is gaining about 1% given the dollar strength. And now the Hang Seng has also opened with a gain of about 0.6%. The SGX Nifty indicating a start in the mild green. As far as our markets are concerned though, we'll have to watch out for two big triggers which will take place in the very near future. The first one is the FOMC meet, especially after the US jobs data that came by, and the Gujarat election. That one will be the one which will be perhaps the trend decider for our markets in the near term.
Okay, so a lot of cues ready to watch out for. But in terms of stocks, Magna, which are the stocks we should keep an eye out on?
Well, not too many stocks given the sort of news flow that there is in terms of individual stocks, but definitely watch out for a few of them that stand out. Claris Life, the board has approved delisting, so that is something that we'll watch out for. They will fix delisting price via the reverse book building, which is the norm. That is something we'll watch out for. Infosys, there is some incremental news coming in on the company submitting settlement application to SEBI over former CFO's severance pack. Not sure how much this would impact the stock price in itself, but this is some news that would keep the street excited. IRB Infra, the CBI has filed a charge sheet with the Pune Sessions Court in their illegal land purchase case, so that is something which will niggle the stock price as well. Hatsun Agro, dairy stocks have been in focus. Hatsun Agro, now they've announced a fundraise via rights issue up to about 900 crores. Nestle will be in focus too. This morning we got a note from UBS. They've raised the target price from 7250 to 8500. Circuit filters have been revised for a lot of stocks, so the likes of Bombay Dyeing, 63 Moons, all of them have seen a sharper circuit revision. Hind Copper, 8K Miles, GM Breweries, all these trader favorites, the likes of Deccan Gold, Adani Transmission, as well as Liberty Shoes, all of them have seen circuit filter revisions. And finally, I'll be watching out for bulk deals. Wiseman Forex, a small company, Giri Capital, influential investors, they've bought about 0.6% equity in that stock.
Okay, thank you, Mangla.
Fresh push towards digital transactions in a less cash economy. The RBI has rationalized merchant discount rates for certain debit card transactions and also introduced the new MDR slabs for QR code based payments. Ritu Singh joins us with more. Ritu?
Cost involved every time you swipe your debit card to make transactions or use it online to make transactions is based on what is called the merchant discount rate, and the cost of that is what is being reduced by the Reserve Bank of India. So now the MDR charged is not based on the value of the transaction itself, but on the turnover of the merchants that are offering you those transaction facilities. So merchants that have turnovers of less than 20 lakh rupees have been categorized as small merchants, and those with a turnover of over 20 lakh rupees have been categorized as other merchants. For small merchants, every time you make a transaction, when it's on a POS machine or an online transaction, the MDR will not exceed 0.4% of the transaction according to the RBI. And every time a QR code based transaction is made with a small merchant, the transaction or MDR will not exceed 0.3% of the total transaction value. In absolute terms, for small merchants, this amount will not exceed 200 rupees according to the new guidelines. But in the case of bigger merchants, which with turnovers of over 20 lakh rupees, MDR has been capped at 0.9% of the transaction in the case of POS terminals or online transactions, and 0.8% of the transaction value for all QR code based transactions. In the absolute terms, it will not exceed 1,000 rupees according to the latest guidelines. This is clearly a move aimed at pushing online payments and digital payments via debit cards by the RBI, because remember, a lot of banks had also been complaining that using POS machines and allowing customers to use them were proving to be very costly, and therefore these new guidelines will come as a welcome relief.
Okay, and the Reserve Bank of India has decided to keep rates unchanged. Its Monetary Policy Committee has maintained a status quo on rates and the stance. The repo rate has been left unchanged at 6%. Now, this is exactly what the street was expecting. On growth, the central bank is maintaining its forecast of 6.7%. Remember, this is also largely on expected lines. The small change which ended up being the big news from the policy yesterday was the minor hike in the inflation forecast for the near term. Inflation range is now at 4.3 to 4.7% against the earlier estimate of 4.2 to 4.6%. The stance of the bank remains neutral. Lata caught up with a whole host of experts on this matter. Let's listen in to that conversation.
I don't think in the near future anything changes actually. I think it is status quo. I don't think even on the deposit side the banks need to do anything to change the interest rates. The lending side, as you know, on the MCLR, it all depended on the rates on the deposit side. I don't think in the near future any change would happen on the interest rate front as far as the banks are concerned.
Okay. Let me just get this deposit rates and lending rates issue out first. Your take, Ashish Patsarthi. From your treasury operations, you would have some idea of whether you expect bond yields to inch up. They didn't inch up after the policy. But do you think that there could be a further pressure on bond yields, and therefore your lending rates or borrowing rates may have to be raised, albeit by just 10 or 15 basis points in the next one quarter?
So I'll take those two things separately, bond yields as well as deposit and lending rates.
Sure.
As far as bond yields are concerned, the market has, obviously the expectations or any hope of rate cuts have gone out of the market. Bond yields have moved up already, and the policy being as neutral as it is, I think you should see a range-bound, market for yields in the bond market, and with the supply
range-bound,
getting lower. So I would put the range at somewhere between 695 to 705, 707, that kind of a range.
Okay, and therefore what would be the impact? So that's how I see.
Yeah. See, I agree with Mr. Gupta. I don't see anything changing on the deposit and lending rates in the near future, unless one were to see a significant pickup in credit growth. I think given the demand-supply conditions at this point in time, we should see steady rates for some time to come.
Okay. Now, before I come to Manish for his take on the bond markets, let me get the economist in. Abhishek, do you agree that we are going to be at this 4.2 to 4.6%? At least for December, I heard even 5.5 inflation number. And then we will be battling with a low base as well by the time we come to March. So even 4.7, the increase in range, is even that enough? Can there be an upside to even that? What is your inflation trajectory?
Well, as you mentioned, RBI's revised inflation forecasts, if at all, are lower than some people feared they would be. So we are at about 4.8% inflation for Jan-March this fiscal year, which is not very high compared to the RBI's forecast of 4.7. Of course, the real worry here is in terms of the commentary that RBI has used alongside its inflation projections. So they have highlighted that they are more worried on the core inflation part of basically inflation rather than on the food part per se. Even though the food and the crude price basically increase recently has been impacting inflation expectations. And as you said, the first quarter next year could be possibly a lot higher than what the RBI's forecast as per the last monetary policy report were, right? So they mentioned about a 4.7% inflation, 4.6 to 4.7% inflation in April, June. Our own forecast there is about more than 5%, right? So there is a possibility that the inflation inflation trajectory would surprise higher.
Well, Mr. Gupta, the governor was pretty detailed that the recap will come with reform, which means that a bank like yours, which ranks among the lowest in terms of NPAs and fairly high in terms of credit growth, will be recapped first. It will be front-loaded, was what the governor said. Given that, what would you say could be the credit growth for the industry and for yourself?
See, I think when the government announced the recap program itself, actually, I think the Secretary DFS also had talked about some of the things which the banks will have to do, actually. I think there are two parts to this recap program. One is that there are banks who are below the regulatory requirement as far as the capital is concerned. So they will be the ones who will actually get capital so that they meet the regulatory requirements. Then, of course, the government has also made it very clear that a lot of this capitalization plan will go to growth requirements also.